Scott Martin is here, so is Michelle McKinnon, and Liz and Ashley all joining in today. All right, stocks dropped sharply after the Fed decision. They're down again now. Scott, is this a buying opportunity?
It will be. Gosh,
but
Stuart, I got to admit,
let's get it clear.
Yet, I don't think
it will
so.
be, but not yet, right?
Not yet. I mean, we really, gosh, I hate to say it this way, and it's been even tough to smile on the intro here, which I do all the time, is because, Stuart, we haven't yet seen that complete just throw the baby out, throw the bathwater, throw the bathtub out capitulation, as I like to call, technical term here, barf bottom in the markets. It's coming. The Fed obviously, I think, put it closer to our future here by what they did yesterday, which was a total mistake. But it's coming, and that's when you have to buy.
So the washout is still to come. We're not there yet. Don't buy until we see it. What you got?
You may not get it because the bond market is previewing, because there's only going to be 2 rate hikes next year. Look at the 10-year. It's coming at 2.75%.
Yeah.
So the 10-year dropped, which is really interesting on the news of the rate hikes and the news that there may be only 2, not 4 rate hikes next year.
Okay. All right. Is it a buying opportunity?
I think it is a buying opportunity.
Now, or you're waiting for the sell-off?
To say if it's now, if it's tomorrow, if it's February like 2016, it's really hard to say. However, I continuously look at fundamentals. Fundamentals look good. And I honestly think that everyone is bearish right now is actually signaling that it's a very positive thing. I hate when everyone in the room is bullish, and then I'm like, something's wrong. So I'd say it's a buying opopportunity.
The Federal Reserve, in their statement yesterday, lowered its growth target for next year. They said the economy will grow, but at 2.3%. When they lower the growth forecast, what does that do to the outlook for stocks?
I mean, the Fed's been wrong before. They were wrong for 2018.
The Fed is wrong?
I'm saying it's extremely hard to predict.
That's true. Okay, what do you got, Scott?
Well, Stuart, you exactly pointed out the key point yesterday. The Fed talked about, decreases they've seen in business sentiment, decreases they've seen in business investment, the lowering of the GDP forecast. Yet Powell comes out and is like not super hawkish. That'd be, I guess, exaggerating. But he was hawkish enough to kind of for the markets to be like, wait a second, if this stuff is all turning over, or at least, say, pulling back a bit, why are you guys still raising interest rates?
Fair question. I think that he ignored the market. The market's giving all kinds of signals that something's wrong.
But that was a little bit of a pushback against the administration, too. I believe there's an element of that in there.
You think?
Well, look, the market's going to be all over the place for a while as people try to figure out what's with the Federal Reserve, what's with interest rates, what's with China trade. Right now, we're down 80 points, 23,200. If I'm doing the math right, we're about, 3,000 points away from the all-time high hit earlier this year. That's a big cut. The price of oil, I think that does factor into the stock market's equation. The price of oil is down again this morning, down sharply, I got to say. It's back to $46 per barrel, even though Saudi Arabia says they're going to cut some more production. OPEC says they're going to cut some more production. The market ignores that, down another 3%. However, we still have a continuing decline in the price of gas. $2.36 is your national average today. Scott, come back in, please. Why not buy oil companies right now?
Well, that'd be one spot where, to agree with Miss McKinnon here, I would say, that would be one spot to start nibbling. Because, oil has absolutely been slaughtered. If you look at any chart, if you look at valuations on some of these companies, Honeywell, Schlumberger, Halliburton, rather, that's the other one I was thinking of. Those would be ones to take a look at. We aren't buying those yet. Oil has been absolutely thrown out. The problem, though, is look at what's happened fundamentally, Stuart. We've had these announcements from OPEC. We've had talks in the U.S., too, about, maybe we're going to export more. And all that does is hammer price. So to me, oil's not ready to be bought yet, but that would be one place to start looking if one was to pick a bottom.
Okay, we do have volatility, even though we're only 5 minutes into the trading session. We were down 150. Now we're down 100. Look at FedEx. Now, their big drop came yesterday after they cut their outlook for the future. Only a minor leagues bounce today, up, 12 cents. That's all you get from FedEx at 162. Higher sales at Rite Aid. That company is up 12%. Of course, it's starting from a low base, up 10 cents to 92 cents. Higher profit at Walgreens. That stock, though, is down 3.5%. Conagra sales, they fell short. When that happens, you go down 5% on Conagra this morning. How about Facebook? The Attorney General of Washington, D.C., suing over the Cambridge Analytica scandal. Michelle, We're at 132 on Facebook now. Is that the bottom or close to it?
I mean, my gosh, Stuart, the headlines just keep getting worse, and who's not to say that the headlines aren't going to get more worse? And particularly, Facebook is really caught in this downdraft because the markets are going down. We're getting really bad headlines. So I wouldn't necessarily be a Facebook buyer here.
You would not. How about you, Scott? Would you buy it at 132 where it is now?
I own it. So we own it somewhat lower. I wouldn't be buying more here, but gosh, you know, owning something like this, though, Stuart, that still does have really good revenue growth projections next year. The earnings growth may not be as good. We may be adding to it just because it's fallen so far so fast.
Okay.
And I think it's important, just to piggyback off of his point, that you still need tech and you still need the broad-based names. But to individually single out Facebook is really hard to say here.
Got it. Anheuser-Busch InBev, beer company basically, teaming up with Tilray to test cannabis-infused drinks. Some of these new drinks will get you high. They contain THC. Some would be purely for medicinal purposes. Is that you laughing, Scott? I can hear giggling away somewhere. Isn't this going to be a big moneymaker certainly for Tilray? I mean, even Anheuser-Busch, they're looking good this morning.
I think it's going to be great. Now, I mean, hearing you just read that made me laugh. I mean, maybe that's the first drink we'll ever have together, Stuart. Who knows? And my mom's watching, too, so I probably should take that back. But the point is that, look, these beverage companies, whether it's Constellation Brands with their investments they've made into cannabis before, they need to be creative. They need to be cutting edge. They need to be on the forefront of what a lot of the youth is going to want, frankly. I think Starbucks, by the way, guys, is another one that's going to start looking into this kind of venture, too. So keep an eye on them.
Wouldn't surprise me at all. And then we have Altria, classic tobacco company, nearing a deal to take a 35% in Juul, the e-cig people, a 35% stake. All right. How much are they paying, or how much is Juul worth?
Well, basically, the reason why they're buying them is because of the 75% profit margin that this company posts, Juul does, on its products, and also the international reach of this company. So,
but don't they want to get into smokeless?
Yeah.
I mean, they're the smoking company.
That is correct.
And it's going down. They want to get into non-smoke.
It's nearly a $13 billion cash injection for a 35% stake. It's coming in at a $38 billion valuation. But it comes on the same day in and around that the U.S. Surgeon General said there's a youth vaping epidemic and there's toxic chemicals in these products. So it's a pretty striking thing.
But
Juul is the giant in the e-cig market. Nearly 80% market share for Juul. So even with regulation coming down the pike, they obviously believe that it's a good investment.
Wow. I got one real fast question for everybody. Let's suppose that Facebook completely changed its business model. You pay to get on their social network, and in return, they guarantee your privacy. Scott, would you pay $5 a month for that kind of Facebook
guarantee?
Projection. Yeah, I think that's about the price, Stuart. I've seen 10 floating out there. That just seems too high. So it's got to be something in the low single digits to get people to take it, I believe.
But would you pay?
I mean, define guaranteed. I mean, they've constantly stated.
I'll define it for you. If they lose your info or they sell it to somebody, you sue them. They're liable.
Well, then maybe.
You join that?
I mean, I'm just not a fan of Facebook.
Sheryl Sandberg already indicated to NBC earlier this year there could be a paid model. She indicated that. And by the way, Facebook has lost $215 billion in market value since July. So they may go to a paid model.
It's at 133 this morning. That's about $100 away from its high, I think. Right. It's that time. Got to say goodbye to Michelle and Scott. Thank you, ladies and gentlemen. Good stuff.